Everyone thinks you can't touch your retirement savings before 59 and a half, but here's what they don't know, and this could save you tens of thousands of dollars. I can literally withdraw six figures from my Roth IRA starting next summer at 44 without paying a single penny in penalties. Today, I'm showing you how this works and exactly how much of your Roth IRA you can take out penalty-free right now. Look, when I decided to retire early, the first question everyone asked was, Zach, how are you going to live for 15 years until you can touch your retirement money? And I'm glad they asked, because the answer completely changed how I plan to fund our nomadic lifestyle. The IRS actually has this rule built in. It's called the withdrawal ordering rule, and it's the key to accessing your money without penalties. Here's the thing most people miss. Your Roth IRA is split into two buckets. Bucket one is your contributions, the actual money you deposited into the account every year. Bucket two is your earnings, all the growth, dividends, and capital gains. The IRS has a rule that says you can withdraw your contributions at any time, at any age, completely tax-free and penalty-free. No waiting until 59 and a half, no 10% penalty, nothing. This is huge for early retirees. So if you contributed $150,000 over the years and your account is now worth 300,000, you can pull out that 150,000 in contributions immediately without any tax or penalty. That 150,000 in earnings, yeah, those would typically hit with taxes and a 10% penalty if you take them out now. But here's where it gets interesting. My strategy is simple. We're going to live off our contributions for as long as we can, and then in my late 50s, we'll begin getting hit with the 10% penalty for early withdrawals. And I've actually calculated this all out in ProjectionLab to make sure it works. I'll show you in just a moment. Between our Roth contributions, taxable brokerage account, and income as a travel agent, we can fund our travels all over the world. So, to do this strategy, the first thing you're going to need to do is know how much you've contributed in your Roth IRA over the years. If you've been contributing all in one account for your investing timeline, then it's pretty easy. You can go to that one account, the brokerage that you have that account with, and pull up their records. Or if you have been keeping tedious records yourself on paper or with notes. But if you're like me, I've been investing for about 20 years now. And over the years, I've had many different brokerage accounts. I've worked for many different jobs where I had Roth 401ks and I rolled those 401ks over into my Roth IRAs. The brokerages I was using would get bought out by another brokerage and everything would transfer to a new account. So over the years, I've lost track of all the dollars that I put into my Roth IRAs. So I thought along the way that I would be able to go back and access the tax records from the IRS. So I'm actually on the IRS website now, as you can see here. Unfortunately, the IRS for the wage and income transcripts only keeps records back for 10 years online. And some of these records I can't even open up on the computer. The files are too large to open up on the computer. I would have to write in and have them mail me the documentation. Um, so I had to tediously just go through every year and try to piece together from various records I had where I had been doing the taxes myself with TurboTax. But I wasn't even using TurboTax every year going back to 2004. So I just had to go back and piece through the records. So I'll show you on the next screen what I was able to come up with. This is the spreadsheet I put together yesterday showing Mindy's and my record of Roth contributions going back for the last 20 some years, going back to 2004 when I first started investing. As you can see, I've got a total of about $146,720 that I've contributed. Mindy has $102,810 that she has contributed. It was a little bit easier getting her records because she had not been investing for as long. With my investing, in the beginning, I was maxing out my Roth IRAs, and it was easy to keep track of that. Then when we started working at Domino's Pizza as delivery drivers, we weren't making enough money to contribute. So there was a few years where I couldn't contribute. And then we even had to pull money out. So I deducted that out of the contributions. So as of 2015, I only had $20,000 contributed. Then we started working as truck drivers, and for the last 10 years, we were both able to contribute a lot more money into our Roth IRAs. Some of that was in our regular Roth IRAs, and some of that was contributed into our Roth 401ks, which we rolled into our Roth IRAs when we left those jobs. So I had to take these numbers and plug them into ProjectionLabs. You'll see that on the next screen. Okay, so here we are in my ProjectionLab setup, and we're looking in my current finances, which I update at the end of every month. As of the end of November, my Roth account balance was $505,372. Here's where you can see the contributions, the $146,720. That's what I showed you on the previous spreadsheet, where I went in from all of the records I could pull up, and to the best of my ability, that's what I know that I've contributed. And so when I go to withdraw money from the IRS, it will be up to me to be able to prove those contributions. And Mindy's is right here. She has a balance of $297,472 with the contributions of $102,810. Okay, so we're looking at the plan page in my ProjectionLab. So up in the top right, you'll see this little alert with the yellow thing above it, that little alarm bell. That's drawing your attention to anything you should be concerned about in your plan. So if I hover over that, it's saying that I have early withdrawal penalties at age 57 and 58. Let's dig into the cash flow and see exactly how it has calculated that. Here we are on the cash flow screen. This is this year, 2025, with me at 44 years old. As you can see, I'm expecting to earn $70,000 from McLean, and we will spend out of our savings about $40,000. Our expenses, roughly $97,000. That's based on the budget. And we can scroll forward through the years and see how that changes. Next year when I retire, I'm only planning on making $35,000. Then the following year, we'll start withdrawing from our taxable brokerage account, $28,000. You can see that down here. And I will skip forward through the years as we draw down our taxable brokerage. Then in 2034, you can see that it shows my first withdrawal. It calls it a free withdrawal Roth M1 account. That's $23,000. That's the first of my contributions being taken out. Then it shows $34,000 the following year, $34,000 the year after that, in 2036. And in 2037, when I'm 56 years old, I'll be taking out the last of my free withdrawals of $54,000. At the age of 57, in 2038, is when I'll start taking out the actual earnings. So it changes it in ProjectionLabs to show, instead of free, it says early withdrawal, $29,570. So when I go to the next year, this is the tax return penalty for that, $2,960, or 10% of that withdrawal. Following year, we have, this is all earnings that I'm taking out. This early withdrawal, $107,000, to meet our expenses, what's projected for 2039 when I'm 58. The year after that, we are old enough to start taking our qualified withdrawals. Therefore, we're Mindy's 59 and a half here, and we no longer will have any further penalties. This is why I'm not stressed about early retirement. I have run my numbers. I've constructed my Roth basis, and I know I can safely fund my entire lifestyle, or at least most of it, for 15 years without penalty. And that the IRS says I can legally withdraw these funds without any penalty or taxes. The key is understanding your own numbers and having a plan before you pull the trigger on early retirement. Don't leave this to chance. Thank you so much for watching. I'm going to leave you with this. This is the ProjectionLab chance of success that it currently shows with one of the Monte Carlo simulations that I run at 82% chance of success. Ultimately, what it comes down to is what you feel comfortable with. This is showing that at the median net worth of all of the different calculations that it ran, the different possibilities that it ran based on historical numbers, my median net worth at retirement would be 51 million. Median meaning that about half the time it would be above that when I'm 100 years old, half the time it would be below that, with an average of 239 million. I hope that I spend more than that between now and then. When you put all of your numbers into ProjectionLab, just make sure that you are comfortable with the numbers that it's showing and that you understand that. If you have any questions about how to figure out your Roth contributions, or if you are also going to be facing early withdrawal penalties like I am, let me know down in the comments below, and in future videos I might go into other ways to avoid those early withdrawal penalties. Until next time, let's continue to drive towards financial freedom.